Welcome to Investors Insights. Our topic today is sell in May, ? I'm joined by my distinguished colleagues, Bobby Norman, Trey Booth, Ty Miller, and Adam Van Zandt. And today we're going to be talking about inflation. We're going to be talking about market volatility. We're going to be talking about the cost of things in relation to inflation. And also from the standpoint, we're going to, do you sell in May and then go away? An old saying that all of us have heard for years. Ty, you brought some great information at the meeting today. Talk about that sell in May and go away. Sell in May ? Elaborate on that.
Yeah. Thanks, Greg. So as you said, old saying, sell in May, go away. Everyone knows about it. So the theory is you sell in May, you stay out of the stock market until November, and you just ride the wave till next May again. The theory was that there would be less business conducted during these summer months. That's proved for the last 2 decades, as you see in this chart, to not necessarily be correct. The S&P has been up from May through October in every year the last 2 decades, except for 2. And one of those was 2008. And we all know how that went. There's been a broad range of sectors up. Last year, energy led us with a 20% return in May through October just alone. So maybe sell in May and go away isn't necessarily the best saying.
Yeah, we hear that all the time. Clients will bring up that terminology, but we follow the data, we follow the facts, and I thought you made some really good points. Simultaneously, we've got clients calling in saying, "Do you know how much this cost?" Or do you understand inflation here? How's that going to impact the portfolios? How's that going to impact my financial blueprint? Well, with that, Bobby, talk about inflation and kind of what we're looking at there.
Yeah, just yesterday I was traveling, visiting family for Easter, and I spent $105 filling up my car. So naturally, I want to focus on inflation. As we got updated numbers last week, where March inflation rose 8.5% year over year. So with gas, shelter, and food prices all having the largest contribution to the highest inflation in over 40 years. So inflation numbers are really very important right now as the bond and the stock market are volatile leading into the next Fed meeting in 3 weeks. And the market's going to be paying close attention to every inflation report as the Fed has made it very clear that they are going to aggressively fight inflation by raising rates. And so on a positive note, there was talk last week of a peak in inflation type of feel. And so as you can see in this chart on the right side, the month over month increase in March fell enough that caused some economists to believe that we may be finally seeing some relief. And a few things we're looking at in terms of helping lower inflation is for rents, gas. Gas has already fallen slightly in the recent weeks. Food and autos to kind of lead the way in lowering inflation over the coming months. And actually, food historically leads the way in periods of slowing inflation. So we will be focusing on the inflation reports over the next few weeks leading up to an extremely important Fed meeting in early May.
Yeah, and then with people looking at summer vacations and more traveling and those kind of things, I know they're very curious about inflation and especially gas prices. And Trey, you gave some fantastic information that really complemented what Bobby was talking about, but looking at inflation in a whole different way.
Yeah, that's right, Greg. Yeah, thank you for the segue. Yeah, so the individual's definitely feeling inflation when you go to the gas pump, when you're at the grocery stores. But the stock market is built off of corporations, and corporate America is definitely also feeling the tinge of inflation. We often focus on revenues, sales, how much companies are making, but there's another side of that balance sheet, and that's the cost of those sales. And so what happened in corporate America, we've seen a large spike in the cost of goods sold. And you can see that in this chart where year over year, we're seeing costs go up 13.4% as of January. But per Bobby's point, those costs that seem to have peaked and are now up only 11.7%. So we're still seeing costs go up. But what we really want to listen for in earnings calls this quarter is how companies are weathering the storm of higher costs. Are they able to pass that on to the consumer? Are they able to be more efficient? Are they able to keep those margins? On the next chart, I want to show you, it shows the operating margins for the S&P 500. This is the amount that after sales and after costs that the company keeps in earnings. And earnings are really what drives the market higher. If a company can earn more, then that can send prices higher. And that's something we watch very closely, is because earnings can be then handed back to the investor through dividends, share repurchases, and that really drives stock market prices higher. So costs can go up, but if sales go up and costs go up, can they maintain those profits? That's what's most important. And what we'll be listening for this earnings season isn't just what people are selling. That $100 gas that Exxon maybe sold to Bobby over the weekend. How much of that $100 that Bobby gave the gas station did the gas station keep? That's what we're really watching closely for in this earnings season, is how corporate America is being impacted by inflation, and are they able to pass it on? How much can they keep? That's going to tell the tale of the quarters going forward and whether or not you should have sold in May.
Yeah, no, that's well said. And let me say this, you guys, some great charts that you're showing this morning. Really appreciate that effort. And then Adam, volatility, clients continue to talk to us about the volatility in the market. And with all the emotion with inflation, Fed raising interest rates and those kind of things, we here at Five Plan Partners always try to look beyond that and see what's going on and really put fact and data together as compared to emotions. And what you do on technical analysis really looks at the emotional as well as factual side of the market movements. Talk about that, where we are in this market and the indices that we need to be paying attention to.
Yeah, I appreciate it, Greg. And you said it well. We saw volatility sneak its way back into the markets last week with the S&P 500 closing on Friday at 4,392, giving us a new short-term resistance of 4,420 with a new short-term support level of 4,360. We're also seeing the 100-day moving day average of the S&P 500 sitting at 4,522. So this is going to be a very important number to look at moving forward. As you said, Greg, we talked about a lot of economic data during this vlog with inflation, the Fed, and even sectors in the market. So we're going to see if that 100-day moving average is in fact creating a new support line or resistance line moving forward for the long term.
Yeah, I think we watch that closely. Technical analysis has proved to be invaluable for us, along with the fundamental analysis like we've talked about. So with that, folks, we're going to keep you updated. Tax season is ending, if you can believe that. And we're getting ready to head into the month of May here in the next couple of weeks. And we're going to be focused very much on what's taking place in the markets and your financial blueprint. We're also going to keep you updated on our social media, on LinkedIn, Twitter, Facebook, our podcast. And so just know that we want to communicate with you in multiple ways. And we also enjoy just the one-on-one conversations that we're having with our clients. We want you to have a great week, and we'll keep you updated. Thanks.